We meet in an hour of change and challenge, in a decade of hope and fear, in an age of both knowledge and ignorance. If this capsule history of our progress teaches us anything, it is that man in his quest for knowledge and progress is determined and cannot be deterred. Because that goal will serve to organize and measure the best of our energies and skills. Because that challenge is one that we're willing to accept, one we are unwilling to postpone, and one we intend to win.
All right, welcome to the next episode of the Energy Impact Podcast. I'm your host, Michael Crabb, and I'm really excited to be joined today by Alex O'Canada. I hope I got the Gaelic accent right. You can correct me. He's the CEO.
That was great, Michael. Thank you.
He's the CEO and founder of Gore Street Capital and quite generous. Alex, welcome to the show.
Thank you. Thank you for having me on.
So before we get into hearing more about the firm and your views on the market, tell me a little bit about yourself. Where are you from?
Well, as you rightly identified, Irish. So Irish, came out of Dublin, went to college in Dublin. It's funny, I was saying to somebody the other day, I was probably part of the last generation that immediately we qualified from college. Everybody got on a plane, right? So we went to London or New York or Tokyo or Frankfurt or the like. After that, Ireland started actually, making some money and people started sticking around. So like many others, I got on a plane. I worked out of London, worked out of New York, spent a chunk of time in the Middle East. Overall, I ended up in investments, been in investments now because I'm old, I've been in investments for about 20 years. Majority of that time investing in the world of renewables. So I've been working since 2006, nearly exclusively in the world of renewables. I was head of investments for a sovereign fund in Abu Dhabi called Masdar, and that was large scale deployment, solar, wind, a bunch of clean tech stuff as well. So I was doing a lot of deals out in Silicon Valley in terms of tech companies in clean tech. But I've been focused on the world of climate change and renewables for a long time. I'm engaged in broadly across the sector. So I have a PhD in renewable energy policy, and I do some teaching and work on some of the research stuff. But yeah, that's kind of me. And my focus has been investments, and I've done that in a few different locations.
Awesome. So yeah, well, that's plenty of content for us to dig into. Let's start at the beginning. So you go to university in Ireland. Was the focus on investments, or the focus? I mean, at that time, it wouldn't have been climate, or are you just kind of exploring different things?
Oh no, I read history at undergrad, right? So I was looking at Irish history and Japanese history. I was involved in politics stuff. I was a good signed up member of the Socialist Workers, so I didn't believe in the rights of property and the like.
Don't tell your LPs that now, right?
Oh yeah, I mean, well, hopefully they don't hear this. Lived in a socialist squat in East Berlin after the wall came down and those kind of things. But no, my undergrad was general arts history. Did my other studies, then went to London School of Economics, where I did a master's in political philosophy, but then discovered this thing called money, and also went to London Business School, where I did a master's in finance. So I think the charitable way to describe it would be an eclectic academic background.
Yeah, that's fascinating. Can you tell us more about the process of that transition? Did you go to your PhD immediately after undergrad in London, or what? Yeah, what was the impetus that you're like, oh man, I need money to live?
Well, so along the way, right? So when I left, I didn't think this is where the podcast was. It's really interesting. So when I left undergrad, started working in tech. Actually, it was the time of the kind of coming up to the .com, right? So there was lots of stuff going on the internet. I got interested in the internet. I worked in two technology startups. One where I owned no equity and it did really, really well. One where I owned a whole lot of equity and we had to wind the company up, right? So, but the first one was in Dublin, and it was doing things on the internet and did very well in terms of what its services was. And then I went to London and, at 24, founded this startup and tried our best to do things on the internet. Didn't work. as the majority of startups, but gave me an interest in the idea of business, right, and the idea of putting things together. I then, decided that after 2 startups, I probably should have something a little bit more establishment perhaps on my CV. So I joined KPMG. I was working in KPMG in London, New York, and various different roles in the consultancy side. And that then led to thinking about other things such as, the world of investments. I started working with a lot of our clients in KPMG who were private equity houses and the like, and really got interested in the idea of how to create companies, how to create new business models. Decided to be able to get into that, I needed to go to business school. So then made the decision and went off to London Business School.
Fascinating. Yeah. So you're really an operator turned investor, which I think is somewhat unusual. I mean, maybe today there's more specialization, but do you find that that gives you somewhat of a leg up, that you've been in both successful and unsuccessful companies, you've advised a whole host of companies, and now do you have frameworks that you can apply to your investment vehicles and projects?
Well, I think we'll come to it later, but storage, which is our thing, right? So where we really spend our time. To be a good investor in renewables, just taking renewables, you need to understand finance, you need to understand technology, you need to understand policy. Right? There's some Venn diagram that you need to sit in the middle of around those. I think when it comes to storage, which I've been spending the last 7-8 years on, I mean, it's even more amplified, right? So we're dealing with a new asset class, brand new business models, complex assets which are doing complex different types of things. And as I look at the development of the firm that I run, I never thought when we set the firm up back in 2015, 2016, that more than half my colleagues would be electrical engineers or project managements or traders or construction guys, right? But we made the decision that we are investors. We manage a significant amount of capital, but we manage that, and then we own the process of that delivery. We own the process for assets being built. We own the process for those assets to generate returns, and we think that's really important. And I'm sure, way back in the depths of time, we're all a set of our experiences, right? Our experiences sit here, and we're the sum of those experiences to a lesser or greater extent. And being an operator, being an owner of businesses, being an advisor to business, and seeing what works and what hasn't worked, for sure, I hope has had a benefit to what we're trying to do for our investors.
Yeah, no, fascinating. Yeah, so sorry, I sort of jumped ahead. Talk to us about the path that led to founding Gore Street, right? So you become an investor. What attracted you to energy in the first place, or was it luck? And then how did that evolve into having your own firm?
Isn't there I don't know whether it's a Kurt Vonnegut line or one of those lines that, don't berate yourself for your mistakes and don't congratulate yourself too much for your successes, right? Because most of it's just luck anyway, right? Is it Kurt Vonnegut? It might be Kurt Vonnegut.
Yeah.
But it sounds like it could be Kurt Vonnegut. But what brought me to renewables? So before I moved out to the Middle East to take that role, focused on renewables, I was in more diversified investments, more venture capital, actually looking at energy tech, looking at tech in general. And we all have choices about where we want to spend our time, right? I don't particularly want to spend my time investing in arms companies. I don't particularly want to spend my time investing in oil and gas companies. We have a choice about what impact we can make as the little bit of impact we as individuals can make. And I thought there was an interesting opportunity, both personally, but also an interesting opportunity in terms of growth-wise, about, why not be part of what is the most important effort that we have to make as a society right now, which is our fight against climate change, right? And and even back then, I made that decision in 2006. There was good reasons to make that decision, not just from that kind of societal one, but we need to do things that we find interesting. We need to do things we find enjoyable, but I also think we need to find things we do things which we think are worthwhile.
Yeah. I mean, you were 2006 is sort of far before that was the norm or socially maybe not accepted. I mean, today there's so much momentum and tailwinds around the energy transition. 2006 was really still kind of a valley, or maybe it was even before like energy tech 1.0, right? I mean,
yeah, I think there was a burst of interesting technology stuff coming out of the valley in the early 2000s that kind of faded. Then there was a big push then from 2006 on, but for sure you still had a huge amount of comments coming into the investor universe going, this is never going to work, this is not, you know, appropriate, and things like that. But to be honest, I still see that. I was on a panel recently, before COVID. I have to kind of define everything as pre and post COVID, right? Before COVID, a big energy panel in Boston, and there was a bunch of investors beside me, who are all much better than me and much cleverer, and there were much bigger funds and stuff like that. And they were, but yet I heard them say things such as, you know, we're very confident in our oil and gas exposure. We're very confident in this, that there'll be no markdowns. It'll all be good, and that these are critical assets which need to continue to have loads of value. And I felt like I was in that scene in, you know, The Big Short. Have you seen The Big Short?
Yep.
Yeah, there's a scene where everybody's talking about everything's fine, everything's great, nothing's ever going to go wrong, everything's going to be perfect, and all going to be all good. And I was like, but guys, at some point, society will not allow you to avoid the cost of your activities. At some point, the hydrocarbons that you're producing or managing will be viewed as detrimental to society, and society will accept a cost on you because it will need that capital to go other places, right? So I'm like, I don't buy you guys can't just as fine. We'll just keep doing shale. We'll just keep doing this. That there's a free ride, and society will not exert some pressure on you. So that's not that long ago. Right. So yes, I think there is definitely a whole change in how we're viewing the industry of renewables, viewing the industry of energy transition. There's really exciting things happening. There's more and more great people coming into the sector. But, you know, oil and gas is still the dominant energy sector of the globe. It has more government subsidies than any other sector, right? And you know, we have big investors from the big investing house saying everything's still fine, don't worry about it, right? So you know, I think one of the biggest, I don't know, I hope I'm not rambling.
No, it's great. It's great. I've got some follow-up, but keep going, keep going.
One of the biggest cons I think we've been subjected to by all our governments is this idea that it's all about individuals. Don't worry, you do your recycling, it'll all be good, do this. I'm like, yeah, okay, you should do your recycling. Give me a break. What we need is governments. We need governments implementing enormous policies, enormous programs, and we need them also doing the counter to that, which is disincentivizing the other side. Now, I say that, you know, the Inflation Reduction Act that you guys brought in, the landmark deal, I really believe that is a game changer globally. So there is movements, right? But you know, we as individuals need to do something, but we also need to keep this pressure on our governments to actually not go, oh no, you know, you should make sure that you're moving your plastics into one bag and your metal in another, and think that's going to solve climate change.
Yeah, no, couldn't agree more. The individual impact is so de minimis, and it's so easy for, you know, those of us in the UK or the US to say, well, oh, we can reduce our consumption 10%. There's probably not a huge impact, right, for us reducing energy consumption 10%. But there's
I don't think it does anything.
No, right? Yeah, I mean, there's 400 million people, you know, maybe there's 1 billion people in that boat. But then there's like 3 billion people that don't have regular access to energy, right? Like I feel like the consumption argument is just poorly founded. I would love to hear your thoughts. How does government transition? I mean, because oil and gas is still such a dominant energy source, whether we're talking about heat or transport or electricity.
Yeah.
How can that transition actually happen? Because there's this like negative feedback loop of pricing that negative externality that really like society has benefited. Yes, investors have benefited from, but society benefits from it as well because it's used in so many areas. So how do you see that transition actually being implemented, or what would you argue? What would you argue for if I was a minister?
I mean, so I think what COVID is amazing. I mean, COVID is obviously terrible and tragic, and I think we all probably got PTSD from COVID, right? From the lockdowns and stuff. I'm not sure I'm still processing it correctly. But what it did strike me is two things. One, I went, hey, we can send everybody to their basement, right? Everybody's going to the basement, everybody go to the basement. We did it in one day, right? And everybody's like, oh my God, everybody's at the basement, right? And society kept going. Right now we had lots of pressures and lots of things happening. And so I go, one, governments can do something as radical as that, right? Absolutely, everybody go home and stay home. I mean, I remember walking in the streets of central London in Soho one time, and there was no one there on a Saturday afternoon. It was totally deserted. One of the global cities, the popular cities. So if we can do that, why is it too hard to remove oil and gas from our society? Right? I mean, I start to question this argument that's always there. Oh, it's too hard, it's too embedded, we have all these things. That's the first thing I would say. The second thing I would say, and I have masters in finance and economics, I understand finance and economics, but we just turned on the taps in all our governments to pay for stuff, right? I'm like, okay, if we can do that, maybe we should do that, right? So I look at the decisions that we make, and I think to myself, they are incremental and they are continuing to benefit some groupings in society. So let's take the transportation for me. EV. What are we talking about? Why do we think that we should subsidize or put public capital to work to help the car industry rather than build public transportation? Right? Why look across, even Europe is better than the States, EU is better than the States, UK is the same, US. Why are we not building rail networks? Right? What's going on? Everybody needs to have their own car. It's a massive waste of resources, right? So there's these kind of decisions we're making, which I think are to the benefit of keeping going the same ideas, right? Whereas actually we're going to go back and go, hold on a sec, let's allocate capital to where the best outcome in terms of decarbonizing transportation is not EV charging networks and the like. It is obviously public transport infrastructure. So that kind of thing needs to be more apparent to me. I mean, it needs to be more clear that they make those decisions.
Yeah. I mean, in that example specifically, there's so many embedded incumbents, right? I mean, this could go back to your sort of social capital days. Like they're all sort of different sides of a flawed coin. Yeah. I mean, how do we break through that morass and say, look, it's kind of obvious? Maybe I'll ask it this way: like, are you optimistic?
I think what will happen right now. Yeah. I mean, and then this is now verging in areas which I don't know. Right, I'm not an expert in climate change. I'm not a geologist or weather expert and things like that. But it seems clear to me that weird things are happening. Yeah. Right. I was down. I was over the Christmas period. I was lucky enough to be down in the Mediterranean. And I was on the Mediterranean. It was 20 to 21. I know you don't understand that, Americans. It was 20 to 21 degrees Celsius. It was whatever, something up to 100. No, I mean, it was like 80s, maybe. I don't know. So, right. That's insane. There was people in bikinis on the beach, right? Yep. That's not normal, right? You're right. In Poland, they were talking about it was hotter than July, right? I'm hearing reports California looks like it's like drowning right now, right? Or it has been, right? Just enormous amounts of water. So people, it's permeating, right? People are like, hold on a sec. It used to be, and there's a term called a wicked problem. You ever heard about a wicked problem? Yep. Right. So people would describe it as a wicked problem, right? Climate change is a wicked problem. It's happening slowly, it's far away, and it's kind of awkward for everybody, right? It's no longer a wicked problem, right? I think because it's coming, it's a problem in front of us, right? Where we go, this is not normal, right? What is the effect that's going to be? So I think governments are lagging here, right? They continue to lag the public in terms of what the public and citizens want. Australia is an interesting example of that, right? They voted out a terrible, if I'm allowed to be, terrible right-wing government, and they put in place, a left-wing, but also environmentally focused administration, right? I think that will happen more and more, and so I think our public representatives need to get with the program, right? They need to recognize that this is what the public wants, and if the public don't get it, we're going to have to put in people who are going to do it. Yeah. It is interesting to see how the message and or science and or discussion dilutes as it moves through the obvious impact
the social feedback loop, the social solution set, and then the politicians that have to debate and horse trade to actually get something done. I don't know the answer to this. I don't necessarily expect you to know or have an answer to this, but like I think the speed of that feedback loop is in my mind the biggest concern and the biggest hurdle. And then if you add all of the embedded incumbents in it that are part of that feedback loop and distorting that feedback loop, I don't know. I don't know how. I think we need more impact to break out of that wicked problem and that feedback loop.
Yeah, I suppose. I mean, this is it's an example coming out of left field, but if you look at Brexit in the UK, right? Brexit in the UK, its feedback loop meant there was 5 prime ministers lost their job in the space of 2 years or something like that, right? So that feedback loop was fast because there was a problem the politicians couldn't solve, which is, hey, we voted, people have been lied to, and everybody did this decision, we've done this, and now we can't implement it because there's no way to implement it while doing the other things. And that feedback loop just meant they kept losing prime ministers, right? Which was incredible for 5th largest economy in the world, stable democracy, blah, 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 right? There, it was like every 5 seconds there's a new English prime minister. So I'm not sure, Michael, that the feedback loops that we are engaged in around climate change won't accelerate to such extent that there will be kind of these changes which take place faster and faster. Because to be honest, the people are on the bikini, in 30th December in the Mediterranean, right? That's a pretty reasonable acceleration from when I was there last year, when everybody was kind of bundled up and shivering and wandering around,
Yeah, no, Alex, that's a good point. No, it'll be really interesting. It'll be really interesting to see how that evolves moving forward. Maybe in the time we have left, tell us a little bit more about how you're a part of that feedback loop, if you will, at Gore Street, and kind of the thesis and what you're building to help move us in the right direction.
So, we founded Gore Street back there in 2015, though we were in action in 2016. We founded the firm to have a material effect on energy transition through the world of investment activities. And though we have track record and I've done lots of solar deals and lots of wind deals and things like that, and they're incredibly important assets in our transition, we just didn't feel that we could make that much of a difference, right? There's lots of guys already doing it, right? And so what we looked for in Gore Street when we set the firm up was what asset class do we think can make a difference, which is still not there yet, but will be critically important. And we were super lucky. I mean, we could have picked biomass perhaps, and no one would ever have talked to us. I wouldn't certainly be on this podcast with you, right? You're like, Alex, who, right? But now, so we were really lucky. We decided energy storage was going to be this critical asset to enable our transition. Without storage, we can't build more renewables. Without more renewables, we're all going to just continue down this ever-decreasing circles of climate change and terrible outcomes. So we started investing in energy storage back in 2016. No one really wanted to talk to us about it, to be honest. It was a pretty lonely, cold walk. But we kept plugging away at it, right? And it's interesting. We our first asset, 6 megawatts. So was when we had it commissioned in 2017 up in North Yorkshire, was the largest lithium-ion doing grid balancing, we believe, in the world at the time. Right. Wow. Now, our portfolio is a gigawatt now, and we have assets coming on stream with 200 megawatts, 400 megawatt hours, like really big, significant parts of energy infrastructure. And so it's crazy to see this development. It's excellent, right? So we have been tracking that development, right? So we have been, holding on to the coattails of how energy storage has developed. It's interesting in that, it's renewables, but it's merchant, right? Our assets are doing 5 to 10 different types of activities on a daily, weekly, monthly basis. You own solar and wind, you make electrons, you sell electrons, you do it at a certain price. Sure. Hopefully it's a price more than your 20-year cost of depreciation. Here, we're consuming, we're generating, we're trading, we're providing capacity, we're doing grid balancing. And so we're in, I think, one of the most exciting parts of the sector. It's intellectually challenging, but it's also growing really well. So, we started investing in GB. Britain was the most important market for a long while. We moved into the Irish market in 2019, which is a small market, but technically very advanced, and it's got some interesting challenges. And then we moved over to North America, all right? And so we acquired assets in Texas. So we're an operator of assets in Texas, and we have assets under construction. We also have assets an asset in Germany, and we'll soon have more there. And so we're very focused on the U.S. opportunity. The mentioned before, the Inflation Reduction Act is really significant. I think that will help a lot, but storage is going to be big anyway in the States, even without it. But we're active in the California market, we're active in the Texas market, we'll continue to grow there. And I think we're in a really interesting spot. Probably one of the only players globally who has storage assets in 4 high growth grids, right? So maybe utility. But we're one of the only. We're pretty unique. Got people on the ground now in Texas, and we'll continue to build out. It's exciting.
Yeah, fascinating. Yeah, you sort of alluded to it, the complexity of the various ancillary revenue streams that your dispatch model, dispatch software, operating parameters have to manage is extraordinarily complex. I imagine branching out into those different markets that have wildly different structures, generally similar products, but very different pricing mechanisms, right? I mean, is it tough to get into the first market and then you really want to scale in that ISO or?
So for sure, what I would say, it's the same supply chain, right? So we're dealing with the same manufacturers. I mean, in essence, also we want to deal with the same, we have the same supply chain, same manufacturers, a lot of the same EPCs, right? So the kind of global EPCs. So that's familiar out of our experience in GB. Same types of activities, different ratios of what you might do them in, but basically we're doing grid balancing or capacity or trading. Right now, you'll do it in different market contract, different construct. And that's where you have to take time to understand in local conditions. We've been investigating the US market for a long time. I've done a lot of deals there. We moved into the Irish market, which is fundamentally differently organized energy system than GB. That was a successful move for us in 2019. Same supply chain, same types of revenue activities. So, we're dealing, the difference is market conditions, not supply chain and not revenue opportunity. And then that gives us a diversified portfolio for our investors, right? Yeah. And over the same investment thesis. And our investment thesis is very simple. Our investment thesis is if we continue to add renewables to the grid, we're going to have storage to help.
Yeah. Yeah, no, that makes a ton of sense. Yeah, so tell us about projections. What do you focus on for the next 5-10 years? Is it doubling, tripling down on new markets for batteries? Are you starting to think about other technologies? Are you starting to think about other funds? Like, where's your head at, projecting forward?
So, I think other technologies is interesting, right? So, we are. Other technology is interesting. We are technology agnostic. Don't care about what technology is. We care about a solution from a tier 1 manufacturer, right? So that's what we need to have. But the solution needs to be able to provide the services we believe the market needs. So we're making a commercial market decision. Right now, that's lithium ion, right? So our fleet is lithium ion. Our technical colleagues work with the manufacturers around things like, do we need nickel in it? Is there different types of chemistry that might work? But in essence, we got lithium ion fleet. I think long duration, we'll start to look at maybe different types of things. So super long duration, up to about 4 hours, I think it's still lithium ion. Post that, maybe flow. Right, though they're enormous. There's enormous chemical plants, really. Maybe hydrogen, though. I don't want to be skeptical about hydrogen, but the efficiency doesn't look that great to me. Yeah. But I think
physics remains undefeated, right? Like until we really can solve some of that, it's hard to see how it works.
Yeah, I agree. I think some of the other stuff I think is madness, right? These guys throwing rocks off cranes and stuff like that. I think that's crazy. But I mean, they're listed, so
yeah.
Really, I mean,
how much time do you spend do you say that you've done, and maybe not that example, but do you really dig into some of this stuff, or is that just sort of the opposite?
And now I wish I could say that was me digging into that kind of stuff, but you know, well, we have, you know, a group of really excellent engineers and technologists led by our head of technology, Alicia, and she's world leading. And so for sure, but what we don't want to choose a technology, right? We want a solution, right? A solution which has the services that the market needs, right? So again, that's our motivation. It's not going, we need to find good technology that does something. No, we need to understand what the market needs, and then back from that go, okay, who of the big balance sheet players can provide that to us? Because we also need somebody to guarantee they can do this for 20 years, right? In the essence, we're an infrastructure investor, right? So, but there are things, really exciting things coming down the line. I don't mean to be mean about the whole kinetic thing, but because it is in essence just pump storage, right, in a different way. But a colleague of mine back in the day once said to me, we're talking about PV versus CSP, like concentrated solar power. Shows how old I am. People don't really talk about CSP anymore. But he turned to me and he said, Alex, there's no Moore's law in mirrors. And I thought it was really clever, right? Yeah. And what he was saying is we can change the chemistry of a PV panel. We can change the chemistry of a battery. But mechanically changing a mirror or a turbine even, right? We can't get that exponential growth that we need to really be able to roll out very large scale infrastructure to get us the cheapest price of cost of electricity, to get us the most efficient grid. And I think I'm still, I think back to what Steve said to me back in the day, I think that was a really good learning for me.
Yeah, no, that is a great note to wrap up on too, because that sort of first principles approach, I think, is so critical across this transition, because that momentum, going back to kind of wrapping it all together, right? That momentum is so critical to maintain that faster feedback loop, if you will, and really make that difference. Anything else? I'll give you the opportunity. Anything else that we didn't talk about that you wanted to plug or mention here for our listeners?
Oh, look, we moved from socialist squats in East Berlin to private equity to, you know, the role of government to the role of consumers. I think we covered quite a lot here, Michael.
It's more fun that way, and I appreciate you humoring me. Well, Alex, great having you on. Great feedback. Looking forward to talking soon.
Thank you, Michael.
Our leadership in science and industry, our hopes for peace and security, our obligations to ourselves as well as others, all require us to make this effort, to solve these mysteries, to solve them for the good of all men and for the progress of all people.